Welcome back to Trading Club Q7. You am your lead educator, and we're in lesson 50 of our course, Chart Reading. Today, we're going to take a deeper dive into breakouts, fakeouts, and retests. You know, I've had many students reach out to me, saying, I've been confused about breakouts for so long. I keep getting caught off guard. Well, by the end of this lesson, you'll have a solid understanding of these concepts, and your trading will begin to make more sense. But first, let me ask you a question. Have you ever felt frustrated when you saw a stock or currency pair break out of a range, only to reverse back in the opposite direction? This is a common phenomenon, especially for beginners. That's why it's essential to understand breakouts and fakeouts. So, let's start with the basics. Breakouts, as I mentioned earlier, occur when the price of a security moves above a level of resistance or below a level of support. Think of it like this: imagine you're trying to get into a crowded theme park, but there's a gate that everyone has to pass through to get in. The gate represents the level of resistance, and if the crowd starts pushing the gate open, that's when you have a breakout. But here's the catch: not all breakouts are created equal. Some are genuine, while others are fake, or what we call fakeouts. A fakeout is when the price moves up or down, but it quickly reverses back in the opposite direction. Think of it like a speed bump on the way to the theme park entrance. The crowd starts moving, but then they realize it's not worth fighting, and they reverse direction. Now, let's look at some key characteristics of genuine and fake-out breakouts. A genuine breakout will often have the following characteristics. On the other hand, fakeouts will often have the following characteristics. Let's take a simple example to illustrate this. Suppose the price of a stock, ABC Inc., has been stuck between 50 and 55 for weeks. One day, the price suddenly surges above 55, reaching 60 in a matter of minutes. This is a breakout. However, if the price then quickly reverses back to 55 and stays there, that was likely a fakeout. But here's the thing: if you were to look back at the chart, you might see that the price was trying to test the 55 level several times before the fakeout occurred. This is known as a retest, and it's a common characteristic of genuine breakouts. Now, let's talk about retests. A retest is when the price returns to a level of support or resistance to confirm that it's the actual level, rather than just a minor pause. Think of it like the crowd pausing to take a selfie before pushing through the gate. If the price breaks through the retest level and continues moving, that's when you know it's a genuine breakout. But, if you're not paying attention, you can get caught in a fakeout, and that can be costly. So, here are some mistakes beginners make when dealing with breakouts and fakeouts. First, they get caught up in the excitement of a breakout and enter a trade without properly verifying the breakout is genuine. Second, they fail to set proper stop losses, which can lead to significant losses if the trade reverses. To avoid these mistakes, always verify the breakout with multiple confirmation methods, such as higher highs and higher lows, or a candlestick pattern like a hammer or an inverted hammer. Also, make sure to set proper stop losses based on your risk-reward ratio. Now, let's talk about some common chart patterns that can indicate a fakeout. One of the most common is the inside bar. An inside bar is a small bar that forms within a larger bar, often with no clear indication of support or resistance. This can be a sign of a fakeout, so be sure to verify the breakout with multiple confirmation methods. Another pattern to watch out for is the fakeout reversal. This occurs when the price moves up or down, but then quickly reverses back in the opposite direction, often with strong volume. This can be a sign of a fakeout, so be sure to set proper stop losses to limit your losses. For your homework, I want you to practice this concept on a demo chart or in a paper trading journal. Choose a stock or currency pair that interests you, and identify at least 2 breakout and 2 fakeout scenarios. Analyze each scenario, and determine